Hey, good evening, everybody. This is Mike Pisani with Smart Option Trading and Alpha Shark. And tonight I thought we'd do a special webinar. This is one where, sometimes people come on, they try to sell you something, they try to pitch something to you. I'm coming on just to talk to you tonight and, talk to you about the markets overall. I call this my fireside chat, where we just sit down and have a discussion about what's going on, and you can ask questions, interact with me, see what's going on, and get different thoughts and opinions, and we're going to go over some information. So, bottom line, let me tell you how to get a hold of me. First off, at Options Mike on Twitter. You definitely want to follow me there. I post a ton of stuff on a daily basis. I also post to my followers on my private feed, but you can get a hold of me here. So try that. If you want to follow me, I would also recommend hitting me on YouTube at youtube.com/optionsmike. That's where I post free videos at least once a week. You could also catch when I do a webinar like this. I'll post that up there, the replay of it. Great places to catch all this information. And lastly, you can track me at smartoptiontrading.com and sign up for my newsletter or sign up for my service. And we're really not here to pitch any of this today. So this is interactive, guys. So, hopefully you guys feel like talking tonight and going over stuff and talking. As we're sitting here right now, oh, look at that. Futures ramping. I wonder, shocker. Who would have thought that might have happened here when we hit 8 o'clock? So this market, what are some words, guys, you'd like to use to describe this market? Go ahead and start throwing them out there. Tough, right? Tough market, volatile, unpredictable, bipolar, crazy, normal, chaotic. How about putrid, uh, frustrating, right? Sideways. Very, very, very tough market we're in right now. And I know it's frustrating the living, out of a lot of people. And it's frustrating because, especially in the last week, we're living from headline to headline, right? And these headlines come at no particular time or day or evening or whatever, and they're not even necessarily real or not. So, futures dropped 300 points on the Dow. Does anybody know why? China. More China news. Does anybody know exactly what the news is? Here, I already posted on my private Twitter feed tonight. Okay? This is a post coming from the South China press. Dow futures drop, drop after China reports they have made no trade progress and are going home tomorrow after one day of talks. Do you believe this? And I'm going a place with this. Okay, you believe, Chuck? You believe they're going home? So you guys do realize that talks haven't started yet. They don't start till tomorrow, right? We've had low-level talks this week, but Vice Premier Lee just flew in late this afternoon, and they don't meet until tomorrow. Okay, so whether this is real or not, I don't know, and I'm not trying to dissuade. I'm saying I'm trying to put a filter on this. Does that make sense to some of you guys who are I see you questioning me and some of the things here, right? I'm trying to put a filter on this for you guys. This is the same news agency that 4 times in the last 2 days put out the headline, China is willing to make a partial deal, right? So this is one of the state news agencies from China. They're trying to put pressure on the United States, just like we're trying to put pressure on them, right? I don't believe anything at this point until I see an official statement. That doesn't mean that the markets aren't going to gyrate all over, right? But, like I said, look at here. This is real time. This is the SPY, right back up. You know, here, here's the ES, right back up, right? The markets are going to react, right? We're going to get a lot of reactions. That's right, Chris, right? A lot of reactions. Whether they're right or wrong, we're going to get reactions. And that's what makes this market frustrating because if you're not on the right side of the headline, you're in trouble, right? And these moves are so fast, they're hard to get in on it. So we're going to talk about some of this. I want to start off with this, guys. What are some things that are bothering the markets here? And let's just start off and put China trade war, okay? But that's not the only thing. Throw some things out. What else is bothering the markets here? Brexit. Geez, a very good one, right? Brexit. Earnings warning worries. Yep. Fed. Oil not so much, but sure. Impeachment. Fed. We'll put that under Fed, right? Fed. Interest rates, right? Very similar, but yes, pending recession. Recession. What else? GM strike's not bothering this market. Middle East, a little bit, not as much as it should, but a little bit. I got one other thing that is coming into my mind here. How about this one? Elizabeth Warren. So the market's got a lot on its minds here, right? And all these things are playing into it to one degree or the other. Now, earnings season kicks off next week, right? So, earnings season, if earnings are good, likely overrides a lot of these bad things here that we're talking about, right? So let's talk about each one of them. The China trade war is really simple. Let's just chat with this one real quick. China trade war has been going on for what, 13, 14 months now, and the market's just tired of it. And probably very unlikely to get any kind of resolution on this anytime in the near future, the way these two sides are going at it. This week it's kind of hitting a crescendo. So we have talks that started this week at low levels, and the high levels are in now, and they start tomorrow morning, right? For the next 2 days. However they end, what's the first sign of whether this is going to de-escalate or whether there's anything going on? So what's something you can watch for no matter what happens here in the next 24 to 48 hours? What could happen here in the next week that would tell us what's going on here? How about tariffs? The tariffs that Trump delayed for US for China to celebrate 70 years of the People's Republic go into effect next week. The other piece of them go into effect in December. So if there is a delay in tariffs, that would be a decent sign. Does that make sense? Even if there's no deal, if you hear I'm not going to introduce, right? So you can watch for that here to see how that gets handled here. Okay, so that would be something to watch for there. We have 2 weeks left, roughly 2.5 weeks before a Brexit, a, a possibly a no vote Brexit takes place, right? That's going to heat up, although I anticipate that's going to get an extension one way or the other. The Fed, the Fed has been speaking ad nauseum for the last 3 days. We had Jerome Powell speak 3 days in a row. Is anybody really worried about the Fed not having our backs here? Have you listened to the Fed, right? To me, the Fed seems like they're going to do what they need to do. They may not lower interest rates as fast as we want, but they're also talking about doing additional asset purchases, meaning they have the back. Trump's always worried about Powell. That's irrelevant. That's Kevin. That's a sideshow, right? And we like that, but that's not going to help us trade the market. Let's talk the recession word, right? Everybody keeps talking about it, but the American economy remains very strong. Are we slowing down? Of course we're slowing down. You cannot maintain this growth forever. Nobody wants to talk about the jobs numbers, but we're nearing full employment. If you guys are out working, you work for companies, a lot of them are going to tell you they're having a hard time finding employment, right? People to employ. They can't find skilled labor. So, yeah, growth rate is slowing down, but that doesn't necessarily mean we're going to dive into a recession. At some point, we will, right? This is a normal part of the cycle. But, that's just going to keep going. You guys brought up the Middle East. We have tensions with Iran. You have the new tensions that now started today with what's between Turkey and the Kurds over into Syria, right? But these are small things at this point, and nothing seems to be ready to blow out of control. Trump does not seem to be interested in getting us involved in further military conflicts. Let's go to politics and keep it as easy as possible. Impeachment, guys, is going to be around for us for a while. Okay, this is the market is barely reacting to it at this point, but this is not going away anytime soon. This will drag out for the next 6 months before this gets brought to any type of conclusion. So the markets are just going to deal with it. We're going to have to deal with it. And for the most part, if you've noticed lately, the markets have kind of chilled out on it. The other one is Elizabeth Warren. I think one of you guys said, I think it was Chuck, that she's like the likely Democratic candidate now, right? Why is Wall Street worried about her? Forget your affiliations. We're not here. I'm not here to take sides, but why is Wall Street worried about Warren? Anti-business, right? Regulations. That she's break up the banks, break up big tech, anti-business, right? So the market is transaction taxes. The market is finding all these reasons to be really, really concerned. But I would point to you guys that there's really two main things that this market is really concerned about right now. Three. I'll give you three. What are the top three things that has this market concerned? Trade war? Nope. Earnings, which start next week, and the Fed, which meets in 2 weeks, whether they cut again. Those three things weigh on more than anything else on them right now. That's what's going to weigh on this market the most in the foreseeable future. So this is where I come to you and I ask you yourself this question. You got to ask yourself, are you an investor, a swing trader, or a day trader? And you may say I'm a swing and a day trader. Or you may say I'm both, a little bit of this. So you have to come up here with a thesis of what's going on here in the markets and what's going to take place. For me, I've said, and I went over at my subscribers, a minute trader. Yeah, that's been in like lately. I told them back at the beginning of December, my thesis was that we were going to have a strong up move in September, followed by a down move or some type of choppy, volatile October, but I felt we'd finish the year at all-time highs. I'm going to sit here and share with you guys, I still feel that way here today, October 9th at 8:15 at night. For better or for worse, that remains my thesis, right? Doesn't mean I'm going to be right, but it means this is what I'm currently looking at. So every morning I get up and I start looking at the markets and I start going over what happened overnight and I start looking at upgrades, downgrades, the news, events that are planned for the day. I've been looking at charts of what I like, and eventually I put these all together in the thoughts of my attack for the day, and I share this with my subscribers in the form of a video and going live for a half an hour before the market opens, and create a plan of attack for the day. And this is what you kind of have to be doing, or having somebody do this for you in this market here. So when you come into this and you say, okay, what's going on? You come into that day prepared, saying, I know what I'm looking at. If I'm an investor, I'm not overly worried right here. If I'm an investor, this weakness is just giving me room to run. And my thesis remains this. When you look at the overall market and you go to a long-term time frame on this market, let's go to a 20-year month. when I look at this on the ES and you see this huge run we've had from 665 all the way up here to 33,029, what does this up here look like? To me, this is very much, nope, like in here, back in the in 14, 15, and 16. Yes, consolidation, KM. Nope, consolidation. Okay, it's a consolidation pattern. They're still consolidating this big move up, and we're getting bigger moves because we're higher up. And when I think of you get bigger pullbacks, right? More volatile because we have bigger percent. The percent's the same, right? But the moves are bigger because we're higher, right? It's bigger. A 1% move at 3,000 versus 600, 700 is a big difference, isn't it? So, to me, this has nothing to do with impeachment. This has to do with the market is still in this consolidation period, letting everything kind of catch up to it. And how do bull markets typically end? How does a bull market typically end? Exuberance. You get the stupid move, right? No, they typically get a blow off type top, a stupid move when everybody piles into it. Kind of like, you remember what we had back in January of 18, that type of move here where the market, remember right after Christmas, the market just every day was up and just running away. But worse, think back to the .com. You get these big move ups. We kind of haven't seen that stupid move yet, right? Where valuations get so far out of whack that they're just, everybody's like, oh my God, right? And then you hear people come on and say, this market's never going to pull back again because, it's a new market. Nothing's the same. By the way, never listen to that, okay? Markets are always going to pull back. We're always going to have corrections. Never ever listen to somebody who says a market is never going to pull back or everything has changed and it can't happen anymore. That's a joke. When you look at markets here, right, we're still consolidating this move. You still have this move up. The market's still working its way slowly higher. It's just consolidating. And hey, what time of year is it? It's the fall. What tends to happen in the markets in the fall? September and October. Don't we typically have our most volatile times during that time period? All right. So you have to come up with a thesis, right? You got to come up with a thesis of what you think and trade accordingly. Now, is this a time to be swinging lots of positions in this market? No. Okay, I'm right. No. Right? If you are, other than stock, if you're swinging with options, you're probably getting your you know what kicked, right? You're getting chopped up, spit out. Holding things overnight sometimes into the next day and quickly selling on the open works. Trying to hold things for longer terms, typically what happens, you end up giving it all back and getting some, right? You got to be quick on the trigger right now in this market. There are things to do every day. Today, we talked this morning about the ideas today that I set up was Roku, Walmart, Target, Microsoft, and Apple. My thesis was on those names that they would be, I'm sorry, not Walmart, Costco, would be least affected by the volatility today. The only one that really didn't work was Apple. The other ones were all strong moves today. They all really played out nicely for people who want to play with them, and some of the guys did and did nicely with them. But every day is just try to look at the market and come up with that idea and say, okay, but that's it. This wasn't the idea of sit in the market. What this market's been doing lately is frustrating everybody because you close on the lows and then you gap up and you trap all the shorts and you go up here, and right now we're back down. So very difficult, but you are getting some action in here that's playable. When you look at the SPY right now, after this sell-off, you have a reversal candle, hammer candle here. You have a reversal candle down here. And both of these gave you 2-day moves, right? They gave you 2 days to play, and they both gave you an out. If you were long after 2 days, you got the gap up, that little bit of a move up to get out of the way on that day, right? It gave you a chance to get out. What you have to do is make sure you've got profit stops in place when you have a profit, even if you're going to get stopped out and it's going to go higher. I played Roku twice today, got stopped out, it went higher. Okay, would have made a ton more money, but I made money, and that's all that matters. So let's talk about sentiment. Do you guys track sentiment? What's going on with the markets? Okay, sentiment often gives us a clue about possible upcoming reversals. So, silly little thing here, the CNN Fear and Greed Index tells you where retail, that would be you and me, are leaning for the most part, or where people are leaning, right? In this case, fear. Okay, so we're ripe for a little squeeze, but nothing special here. When it gets up into this extreme greed, you should not be initiating new positions, should you? You should be looking to buy down in the fear range, especially in extreme fear, and sell up into these areas. Now, this thing doesn't work as good as others, but this is a free one. It's easy to use. Let's talk about some other ones. Okay, the put to call rating. I use this every day. The put to call rating will tell you when the market's getting too far ahead of itself in one way or the other. And typically what will happen when the market gets too bulled up or too bearish is what? Who's paying attention? What happens? Reverses, right? Why do we get a reverse? It's a sentiment smack, right? The market hates to pay, right? Market hates to pay people out. So what do? Right? We want to smack everybody out. When the market gets too bulled up, they want to get everybody, they want to knock some of that bullishness out and make everybody hurt for being too bullish, right? The same time when the market gets too bearish, they want to do the same thing. What has been going on lately is a little bit different. So after these big volatile swings, right, and these are my marks, when we're above 1.175, I consider the market getting into a very bullish phase, and you should be careful initiating swing longs. When you get below 1, I consider the market getting bared up, and you should be looking at for some sentiment reversal the further down it goes. And in between is the neutral area. Yeah, I can, Kevin. I do have that, but I can't do it quickly here. But you can definitely do that with stock charts here. I don't know if I have it here anymore. I have to go looking for it. I'm not sure where it would be. Bottom line is, look at the reading from a couple days ago. Here is your smack. The interesting thing here is right now is that sentiment has been staying very bared up. And what that really means is going on is this market is more interested in protection than anything else right now. And what that means is, as we're sitting here today, that the market continues to buy puts on the market at a big rate, especially on the SPY. The SPY has been the one they've been loading up on the most. And they continue to come in on big waves and come in and hit it over and over again because this market is worried. This market's worried about everything that's going on here. So sometimes it doesn't work. When we got this reversal last December, you guys were doing things with me. I think I was one of the few people back in a couple of days before Christmas saying we were going to get a Christmas rally, a Santa rally, right? Because why? Look at this. This was telling me we had to get some type of reversal. Now, I didn't know that we were going to reverse so hard and go all the way up and the market was going to take off. But I felt very strongly we get a strong bounce in the market during the week of Christmas. Here, we're kind of in no man's land. A couple other things I always look at. The oscillators. The oscillators track how the level overbought or oversold the market is. And what I look at these on a daily basis is, okay, 0 is neutral. So for me, 0 to 100, we're neutral. Negative 100 to negative to plus 100, kind of the neutral range. When we get above 100, we're starting to get hot. And when we get over 200, we're getting very hot. Likewise, when we get down under 200, we're getting very oversold. Okay? Meaning we should look for a reversal, a sharp reversal in the markets. Right? We've been kind of stuck, unable to get a very good reading here. The market doesn't want to give it. Even look at today. Today's bad action, we're at negative 93. 2 days ago, we were negative. Yesterday, we we're at negative 152. So today's bad action actually took the oscillator running back up. The NYMOT, which is this one, tracks the New York Stock Exchange. The other one I use is the NAMOT. That tracks the NASDAQ. Okay? So here we comes down. Right? This one also bounced. This one got us a nice signal briefly. And you know why it was getting a nice signal down here? What name was struggling? Remember all the tech sell-off, right? So what started to happen about a month or so ago? You guys remember about a month ago? Right? Some of these names, we started seeing the weakening, this rotation, right? Right, JD, rotation. We started seeing some rotation specifically out of these names that had been leading. The high betas, exactly. Like the shops of the world, right? Roku got smacked. Here's some. All the recent IPOs started to get a smackdown, right? That we hadn't yet seen before. So we saw some major changes coming into this market at that time, which was a sign that you needed to be more careful, right? So what's the one thing this market clearly lacks right now? BYND. BYND is a cult stock. Leadership, right? Leadership. So when we go to this market right now, we could just let me grab a chart real quick before I get myself in trouble. Here we go. Oops, wrong one. Start with the financials. Now, leadership. The financials have been trailing all year, right? So the financials have been unable to really get going for the last couple of years. They've been going sideways. And here we are. And what happens next week? Every major bank reports next week, right? We have a huge earnings week ahead. You got Goldman Sachs, Citigroup, Bank of America, Morgan Stanley, JP Morgan, and some of the regionals. You got Netflix reporting next week. Everything really kicks off big time next week into earnings season. So the financials, there's been no leadership here, right? No leadership at all. If you're going to play them, the very few names acting well. JP Morgan's been about the best, but it's not leading either, is it? What else? What other major sector has just been completely out of play? Energy, right? Energy is a major, major sector. This has been out for over a year now, right? What do you notice here? The 200-day cannot clear and hold it, right? We'll get up to it, briefly push, can't. Coming into a big spot again down here, isn't it? If it cannot hold here, the December lows are certainly in sight, aren't they, as we go into earnings season? Is there a catalyst for oil? War, right? Something nobody wants. Exactly, war. I have one other one. Trade deal. You got it, cheating, right? JT, both of you, right? If we got a trade deal, that would be a catalyst. That or war, but nobody wants war. So, at this point, I keep telling everybody, I wish this sector was in play. There's so many names that are beaten up and beaten down. They're not there. What's some other big sectors in the market that are just not in play? Biotech. Why is biotech getting beaten up so bad? We'll come back to consumer staples. Right? Why can't biotech find a bid? Right? It's political, isn't it? JD, right? It's political. It has nothing to do. It has to do with politics. It has to do with both the Republicans and the Democrats are out to beat up everybody on drug prices, right? And to find a way to bring drug prices down. Everybody's focused on this. So IBB, which had been clinging to 100 for a long time, finally broke 2 weeks ago and slowly heading down lower now. So that's another big sector that has been mostly out of play. Are there names in this sector that are outperforming, can be played? Absolutely. But you have to be very name specific, right? And don't overstay your welcome. Utilities have been good, right? They continue to act well, been a safe haven. Consumer staples have been in play, haven't they? But they've been kind of starting to peter out. And when I think of that, I think of names like Procter and Gamble, which, beautiful move here, slowly starting, maybe starting to lose a little bit of momentum. What else? What's leading this market? Are there any names that are leading us right now? Gold. Nice, right? Gold's been strong. Okay, gold had this big move up. Why has gold been so strong? Fear, right? Utilities, gold's you fear. They keep running into gold to hide, right? To get away from the trade war, right? You can see this move. Little breakdown here, but it continues to hold above this 140 area. It hangs in there. You have a downtrend here, right? You can see this real clearly, by the way, right? So if I was to come in here and say, hey, let's draw a quick line, right? So when you look at gold, what has to happen for gold to get going? Has to go. Uh, Gold is probably where they're going to run to if the trade talks fall apart, right? If we get fear, that's the fear trade. Okay, that's probably where they're going to run to if it falls apart. That's been their safe haven. That's the place they've been going. But right now, it's kind of in a stuck phase here, but hanging in there. Um, what else? Keep going on out there. So for me, every day right now, it's about trying to find names that I think can be in play. Names that I can make. Yep, Industrials Week, retail. I was on TD Ameritrade today. Retail, great one. Retail's very select, isn't it? Costco, beautiful chart, right? This name looks primed to move up and to test this all-time high here. Beautiful technicals, everything looks great on this one. Just had earnings. They bought a little bit earnings dip and ran it back up. What else? How about Walmart, right? Another one. Look at this. Right back, just missed hitting an all-time high today by pennies. Strong. Chart looks beautiful. Technicals look good on this one for the most part. Hanging in there. Target hit a new all-time high today, right, Don? Finally did it. This 2 month period of going sideways, tight setup, faked everybody out with a move to break the bottom of the Bollinger Band, then broke it to the upside. We'll see if this one can now break out and go. Definitely some interesting stuff like that one. Um, the overall retail market, though, remains weak, doesn't it? Mm, not necessarily. We haven't had a trade deal for 13 months and retail's at all-time highs. They might dip, right, as the market pulls, right? That doesn't mean they're going to not pull in, right? So what you have to do is do what I do every day is look at the chart. So when you look at this chart on Costco, what's the first thing that should stand out to you? See the purple line, the 50-day moving average? You notice how it continues to hold this? So if it breaks below it, if it takes it back, it's generally a good trade, right? So if you want Costco, higher highs, right? If you want Costco, and let's say tomorrow morning we wake up, right? And let's say the reports are true, and China's on their way back home, and there's no deal, and Trump's throwing a fit and threatening even more tariffs, right? And the market plunges. This is one of the stronger names. If it hits and holds the 50-day, you should probably be looking at it, no? If you like the sector. I'm not telling you, please, I'm not telling you to go buy it. I'm telling you how I think. Does that, I'm just trying to tell you how my thinking is here. Okay? So you look at that, right? You look at some of these names. Um, stay away from the turds. Macy's. Is there any reason to want to be involved in this chart? No way, right? Yep, that's exactly it. The tariffs are really only affecting manufacturers. The retailers, they're all talking, Don, about they're worried about the tariffs. They're seeing their costs go up, but so far they've been able to deal with it, right? So Macy's here. Yep, institutions also jump into the 50-day, Kevin. Good point. So Macy's here. You don't want to be touching this, right? Stay away. Don't go after these. Today, for example, I didn't take the trade. It would have been a nice trade. Under Armour, beaten up name in retail, in the apparel, right? They hit the weekly 1950 calls early and often. It gapped up and it got a nice little move. That would have made a nice trade today. But instead of trading this, what are two names you should be thinking about trading instead of Under Armour? When you have a market like this, you want to focus on what names? The leaders, right? So how about Lulu? Chris, you all brought up Nike. We're going to agree too. Lulu, which, trying to hang in here, going sideways, it's had a big move. Do you remember, it wasn't too long ago when we were talking, remember a couple years ago that this stock was going to go away because of everything, right? So if you want to trade in this market, this one, I keep an eye on it. Nike. Nike had a beautiful move off earnings, right? This weakness is probably a gift because now when you look at this chart, you have a place you can trade against, right? Right now, it has this gap here. So firstly, from a long perspective, as long as it holds that gap around $90.50, you can stay with it, right? If you want to short and the market's dumping, you could short this thing probably for a quick move down to 88.50. Make sense? I'm not seeing, I hear you, Kruk. I'm not seeing anything yet on my news feed about it. But Fox also has been wrong a lot of late. Again, I I would say, unless you're a futures trader, wake up tomorrow and see where we're at, right? Is it going to do you any good to sit here tonight and watch the ES and see what we do, right? We're all over the place. So, a lot can happen between now and then. Let's talk about how we're going to attack this. So, Nike, strong name, right, in that sector. Somebody brought up Ulta. I would be extremely careful with Ulta, okay? This name, this was a very, very, very bad report. I love this name. It was extremely bad. This move up here was on a big inside purchase, not because anything fundamentally changed. I'm not saying that Ulta is not going to come out of this and be okay eventually, KM. And if you're investing in it and you're buying the stock, I think it's a great idea. If you're looking to swing trade it here for a long, I would be patient. Let it give you a reason to get in. For me right now, I look at this chart, it's underneath all the moving averages, right? It got to its gap, it pushed in, it failed, and pulled back out. Didn't have the power to push through, did it? Let it give you a reason right now. Maybe it puts in a double bottom down here at 224.25 area first. Maybe it comes in and starts to turn and get a reversal candle to get in on a higher low. But right now, I mean, there's really nothing here. Kevin, I was on TD Ameritrade, talked about the airlines. The airlines aren't leading. The airlines are horrible right now, unfortunately. Delta has earnings tomorrow morning, right? This name, nothing going on here. Been weak. Maybe it can hold down here around this 51 area. Stronger support down here. You have a 3-year channel between roughly 46 and up around 60 something, 63, 64, right? American Airlines, hideous chart. How hideous? Here, let's do this because I can do it faster here. Look at this weekly chart. Since this high, nothing but down, right, Kevin? Nothing here yet. UAL is the best one. Why? Because it's in a consolidation phase. You could even make the case that it has a series of higher lows, right? So you can make a case here that this one is acting better, better management. Let's talk Boeing. So Boeing and the 737 MAX is probably hurting a lot of people. Delta has earnings tomorrow. They're front-running earnings today, Kevin. I wouldn't read too much into it. Delta has earnings before the open tomorrow morning. And they're just buying them ahead of it. All the airlines. I saw option flow in all the airlines today. Let's talk Boeing. Who believes that the MAX is going to get back in the air? I'm not kidding you. You do in January. There is a possibility that the MAX may never fly again, and all those planes they've been building, they're going to have to be retrofitted back in to a regular 737. But um, until we get a clear date, that's going to continue to hang on the stock. When I look at this chart, I like this name. Right now, weakness off the 200-day is buyable because it wants to hold, and it still can't get through 390. And what is not next week, the week after next for Boeing? Earnings, right? So here's something else about Boeing. They have not reissued guidance yet for 2 quarters and still need to do so. So, we need to see how this plays out. Okay. I like Boeing long term, but until they issue guidance and the MAX gets back in the air, you have to be extra careful with this one. Again, too much going on. And it's also caught up in the China trade war, right? Because China is a very large purchaser of planes, right? What if they stop buying completely from Boeing? Which they already have started, by the way. All right. So I've been talking to you guys for 45 minutes. So this is where I turn it over and say, one, I hope this is helping you guys. I'm trying to get you how I think and how I'm approaching things here. And we got about 15 minutes left. Ask any questions you want, anything you want me to take a look at. This is the time to do it. Sure. Yep, all those flights are lost capital, plus those planes are just sitting out there. There's a lot going on there. So let's talk shop. Thank you, Cam. Appreciate that. Shop, shop, shop. So shop was one of the few names I lost on last week. Shop caught me when it tried to go on Friday. I chased it and took a little bit of a hit on it. I didn't have a big position. So this is what happens when a name runs too far too fast, guys. And nobody thinks it can come back down, right? This thing went and ran. Look at this move from all the way down here, 120 area to 410. Insanity, right? So all we've had happen here is the air's come out a little bit, right? Air's come out, but it's desperately entered a weaker phase, right? And by a weaker phase, it's lost the 100-day and the 21-day, and it failed at that, right? You might be having a hard time seeing it, but right here, right, you can see this 329 area, the 100-day and the 21-day are. It pounded against it 2 days in a row last week and couldn't get through. So for now, if you want to be long, you either wait for a break over it or wait for a reversal candle up into that, and that's your resistance area. Is it a cult stock? It got a little bit of that cult stock status. I actually still like it. But kind of the same thing. This one kind of reminds me of the same thing what happened with Nvidia, guys, and some of these other names, right? You get these huge move up, right, off the lows. Remember Nvidia came all the way from $20 to 292, and it's it has to breathe. It comes down and it goes sideways, right? And Nvidia is consolidating here between 140 and 200 right now. So similar type of move. Makes sense? Let's talk Amazon. Amazon, you want to move up. It wasn't long ago Amazon was taking over the world, right? It was unstoppable. Nobody could compete against them anymore. Except now we're seeing Target and Costco and Walmart making all new highs where Amazon lags. So what's one of the reasons Amazon's getting beaten up here a little bit? I got a couple, and since we don't have a lot of time, I'll start talking about them. One is the last three earnings periods have not been great, right? They have not had great earnings the last three earnings periods, right? They've missed that. Two, where does all their profits come from? Where do their profits come from? Their profits come from the cloud, right? Their cloud, AWS, right, JD? What's been going on in this market? What names have been getting victimized the worst right now for the most part? The cloud, right? The AWS, these cloud companies, software companies, cloud. So for me, very simple. I kept saying as long as it kept holding the 200-day, it was strong. It broke it on this day. All right. I usually say if it cannot retake the 200-day in 5 sessions, look out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Look out. What else is going on? The 8-day, which is a fast moving average I use, it can't get above it, can it? It's lost that. So right now, at this point, Amazon is either a short or until it can clear the 8-day, it's nothing to me. It's out of play. Might take till earnings. We'll see. What else are we talking about here? Somebody brought up something about options. When you find and draw reasons on the SPX for options, the SPX very very simple. I don't think anything really changes for me on this one. When I look at this here right now, the grudge match, the area it has to get above for this thing to turn loose. It has to break above this 290, this 2945 area, right into this area where the 21 day is setting up. I could do it easier on the SPY. I have those actually set so for it is. So it's got to get above there to set loose. Right now, until it can get above here, it's in a weak phase. And to me, right now, it looks like an H cell pattern. And if you guys don't know what an H cell pattern is, it's where you make a lowercase h. And just to put it very easily here for you, drawing tool, right? It's where you come down like this and you make a lowercase h, right? So you have two options on it, and that's not going to hold up, but anyway. You either short where it fails, so like today, we pushed into the gap area here and we failed at the 100-day. So right now that's resistance. So if you want to short tomorrow and you can't break above that and you get to there, you could try a short with a tight stop off of there, or you can try a short on the break of the low of the H. Okay, I prefer to try to short higher with a tighter stop because a lot of times these are head fakes for what it's worth. So that's what I see when I look at that. Oxy, energy guys, I don't want to spend a lot of time on them. These all look broken to me, right? Earnings are coming. I don't see a ton here like this. Look at Oxy, a new 52-week low today, right? Broke this here, this rollover pattern, cannot get going. Energy just, until there's a catalyst to me, unfortunately, and I hate it, Chris, energy is just not working right now. It's just not. I would rather spend my time looking elsewhere until something changes. Because even when you try to bottom feed in this sector right now, it's not working, is it? So why waste our energy there? Crocs. Now that's consider retail. Okay, Crocs. I don't understand this name. Beautiful chart, Chris. Um, you'll watch Deadpool and you could all go wear your squishy Crocs shoes. Nice little reference there for you guys. Uh, nice move, right? You want to talk about a change in character? I always talk to my subscribers about this. This day was a change in character. You probably earnings. You gapped up and never touched it again. Well, it was also a change, right? You created a gap that never filled, right? You never even tested it, did you? And since then, up, here's another gap. Did we test it? Yes, we held it. Change in character, right? Move up, move up. Now you're coming into this area. Let's go look at Crocs on a longer term chart. Okay, so next area is this all-time high at 31.88. You got earnings coming on November 7th. Play accordingly. I would not be in it for earnings, but that's me. I don't play earnings. What else here we're talking about? Crocs. What other names you guys want to look at? Let's talk a couple earning names next week. Let's talk Netflix real quick, and then we'll come back to. I see you guys want FDX. I got it. I see it. Sorry about missed that. We'll come back. Netflix. This name has been a very weak name for a while now. So this earnings gap, right? Remember they missed. So what is the number one thing to focus on next Thursday, or is it Wednesday, whatever day it is, for Netflix? Subscribers. They raised, remember they missed badly on subscribers last quarter, and then they raised subscriber guidance big time. If they don't hit that, look out. Even more pain, potentially down to 200, I would think, on this name. So see how that plays out. I don't know, Kevin, what happens on the next Fed meeting. Since this is the last one to December, if the markets are holding in, I suspect they try to go until December before they do a cut, which might upset the markets. If the markets are weak, they're going to cut another 0.25, I would bet. That would be my best guess for what it's worth. FDX, Federal Express. This name, cannot find a bottom right now, can it? Right? Name continues to come down. Broke this major low. Another very bad earnings running down. When you look at this name, you got to say, okay, where can we go to now? All right? It's look at this chart. Your 5-year low is 119. That's kind of in play at this point. Okay, I don't see a catalyst. If trade, everything's slowing down, China's slowing down, less shipments going there. They're the ones getting targeted by China every time they want to take something against us in the shipping. I'd be careful. NVIDIA, I touched on already, but NVIDIA to me here is a little bit range bound right now. Don, it's kind of stuck here. It couldn't quite get above this area yet. It's still struggling. But I will say one thing I like about this chart right now, Don, is it looks like it's trying to hold in and change its character. After this low, we put another higher low in, right? You could actually say we've made a series of higher lows. It's gotten above all the moving averages again. It needs to take out 192 to really get going and back in the game. But they're all subject to everything going on in China, so you got to be careful there. But it does look to me like this name is trying to wake up. Earnings are in 2 weeks on that one. Apple has been the best name out there, one of the ones to own. Even today, look at this chart, right? It's just off its all-time highs of 233 and change. It's holding above all the moving averages. When the market was weak today, right, Apple still hung in there. To me right now, this one has some go-to status. It also has a little $75 billion buyback that's keeping it going and helping it out. So this is one for me. I would constantly be looking to buy on dips. Microsoft is the other one. Okay, Microsoft here, again, consolidation type pattern from all the way down here when it was trading under 100, all the way up to 142 area. Now it's consolidating. It did break down in the last week. It lost this nice little series of higher lows here, but it's trying to get back in and holding in here. We'll keep an eye on this one as well. So another one I want to keep an eye on. Again, I'm trying to focus on the stronger names, guys, when I'm out trading right now. Uh, you know, AMD, I still think this name's going much higher, but the chart is slowly been weakening here. Couldn't get going. Maybe this earnings wakes it back up. Watching for this 27.39 area to see if that holds, if it wants to dip down to there. And Micron, uh, again, changing character here. Huge move up. Earnings were not bad. Just after that move weren't enough. Has to hold here. If it can continue to hold, the 100-day stays in play, then watch the 200-day down here. But right now, no longer leading. And we kind of lost our leadership in that sector. Last one, Yeti. Nice little chart, Yeti. Newer company, right? Recent issue, less than a year old. Trying to hang in there. You have a downtrend right here that is trying to break right now. Right? See it? Keep an eye on it. So if it can get going and get above there, this thing may find some way to move again. Check earnings on it. Might wait. But certainly it's trying to get going, and certainly it's showing that right now the 200-day area is acting as some support right now, at least for now, and right around this 26 area. All right, guys. I hope you enjoyed tonight. I'm going to try to do these at least once a month, maybe more often. So please, if you don't follow me on Twitter at OptionsMike, okay? Because I post this stuff on there. You'll get notifications of it. And I always post the replays on my YouTube channel, youtube.com/OptionsMike as well. Yeah, missed doing these. I'm going to try to do these probably every 2 to 3 weeks to try to keep in these. Thank you, guys. Last thing, and I say this to everybody, I've had a nice year. It's not an easy market. If you're not comfortable, cash is a position. If you cannot sit still and do nothing, take your size down if you just have to have something to do, right? Manage your risk. Risk management in this market is the most important thing you can do. Don't let things get away from you until the market gives you a reason to start loading up on risk, and then we'll go for it. Everybody be safe. Thank you so much for joining me. Have a wonderful night. We'll see what tomorrow brings. Where's the ES here? We'll take one last look before we run off into the ON. Yeah, it's going sideways. Doesn't really know what to make of all this. See you guys. I start posting around 6 in the morning. Thanks, guys. Have a wonderful evening.